Let's do a quick review of Project 2 since several of you missed the class and some of you didn't get it. So let's take a look. I'm going to go through it pretty quick, right? Because a lot of this information is on Canvas. So the goal, the plan, the requirement is for you to analyze the income statements for 3 different companies that are in the same industry. So for example, automotive, airline, retail, chip companies, so that would be semiconductors or software, gaming. You've got a lot of choices, right? There's a couple thousand, 3,000 companies. And then you've got to analyze those financials, and we're going to get into how you do that in a minute. And then the whole purpose of this is not that you were able to put the data together, but the analysis. Which company, in your opinion, performed the best? Which one? And we'll look at some of these things, and you get to present the findings to the class, and it's due the week of the 18th. So we got a couple weeks, but it's going to take you a little bit of time to put this together. So I'm going to go to the SEC website. So I'm just going to buzz over this real quick. This is for your reference. You can go get this on Canvas, right, as a refresher if you don't want to watch this. But the key is that you want to get to the 10K. And the 10K is the only document you want to use. If you use the 10Q, you get 0 automatically. And that means that you didn't pay attention, right? And so you want to use the 10Q, a 10K. When you open up the 10K, there's going to be a link that says open document, open the document. And I'll do that in a second. And then you want to go to item 8, which is financial statements. So just practice, right? Go there, open up financial statements. Now, some cases, you're going to open them up and it's going to be right there at the top. In other cases, you have to scroll down a little bit and you got to go find them. Either way, the key is that you want to find the income statement. And it's statement of operations, or it'll be, called a number of different things, but you'll know it's the right thing because it's got revenue and it's got taxes and it's got net income, right? And all the other stuff in there that we've been talking about, cost of goods and etc. I'm not going to review this again because we've already reviewed it in class, but these are the different components of the income statement. So the key here is that you want to be able to convert this into data that you can then discuss. So we really can't talk about whole numbers, right? We can't say, oh, okay, Apple or Microsoft or whoever, they grew by this many dollars, and then compare it to like Apple and say Apple grew by this many dollars, because it's not the same, right? And so we want to convert it to percentages, and which company is growing at a faster rate, which company is doing a better job at managing their expense. The only way we can really do that is to convert it into percentages. So to convert it into percentages, it's super easy, okay? There's the formula right here at the bottom. It says change dollars. So we've got 2 columns here. We've got change dollars and we've got change percentages. To calculate the change dollar, you take the current year. So in this particular case, it'd be 2021. And so you take this 71,074 and you minus the 220. Same line item, product line item. So 71,074 minus 68,041. Super easy, right? Just basic subtraction. Current year minus past year. And then to calculate the second one, it's the 220 minus 2019. Once again, you can just use these as guides. But once again, now we're just at numbers. We need to be able to turn them into percentages. So to calculate the percentage, you take the change dollar, and so the 3,033, and divide it by the previous year. Or here you would take the 1972 and divide it by the previous year. That will give you the change percentage. In this particular case, it's 4.46%. So super easy. I mean, this isn't really complicated, but it is super easy for you to overthink this, which you don't want to do, right? You just want to make sure you're looking at the same line item. In this particular case, it's product. You take this year's revenue minus last year's revenue. That's it. And then to calculate the previous year, it's this year's revenue, 68,041, minus the 66,069. So it's always going to be the current year minus the past year, and then that past year minus the year before that, always. And then to calculate the percentage, you're just going to take that changed dollar amount and divide it by that previous year. And so you're just going to have to practice a little bit. This is where that whole muscle memory concept comes in, because you just want to be able to do that and do it without it being not all that complicated. Then when you get to the analysis phase, right, we want to make sure we're picking, I'm not going to ask you to do the whole income statement, but pick like 5 line items that you think are relevant to this company or to this industry. And by the way, they all need to be the same line items for the different companies. So you may run into where, well, like Nike, for example, they don't call their stuff cost of goods. They call it demand creation. I don't know. They call it some weird stuff. I think that's their marketing is demand creation is what their marketing expense is. But if you get a company that has something funky like that, then just move on to somebody else. Excuse my dog barking. And so you just want to pick those line items. So what I did here is I just said we should look at, in this particular case, we should look at the revenue makeup. So we've got product and service revenue, two very different types of revenue, right? With product revenue, we're going to have higher cost of goods because they're physically making something. There's a physical, tangible thing that's being made. Services, that's not necessarily the case. Like in the case of Microsoft, it's just me paying, the $125 a year or whatever to use their software. I download it. They've got expenses associated with it, right? They've got, servers and software. Some software development may be attributable to cost of revenue. But they've got some expenses, but the expenses as a percentage should be significantly lower than they would be if you're developing a product. So I'd want to look at that. So in this particular case, product revenue grew by 2.98% last year, and they grew by 4.46% this year. Growth is nice, but it's not super exciting. The services business, however, looks pretty darn good, right? Grew by 25% last year and grew by 29% this year. That's pretty exciting to me. Overall revenue grew by 13% and 17.5%. That's pretty much what you want to look at, where the numbers positive. And then I like to look at research and development because, for me, research and development with a technology company is kind of a big deal. I want to see them spending, a big chunk of their revenue on research and development, just so they could stay ahead of the competition. The world is full of companies that thought they had the best thing in the world. They did not continue to innovate, and they then went away, right? Because competition is always like not one step behind you. They've got like this their foot on the back of your neck, and so you need to be constantly moving forward, or else they're going to run you over. And so I like to look at research and development. So in this particular case, they went from spending 16.8 million to 19.2. That was a 14% increase. That's a lot. That was a pretty big jump. I'm like, yeah, good for you. But then, that pace slowed down a little bit and only grew by about 7.5%. Still $1.5 billion more than they spent the previous year. But, I like to see them spending a chunk of dough, especially when they've got, that service revenue growing at the rate that it is. I want to make sure that we can stay on top of that. But still, that's one of the data points that I look at. And then we want to look at this operating income number. That operating income number is a pretty big deal. And I like to measure that because that gives me a lot of insight into how well the company is managing expense. So we go in and got it. We've got these numbers. Operating income grew by 32%. Operating income grew previous year by 23%. And then the punchline, right? In both cases, they had pretty good years where net income increased. It increased by almost 13% last year, grew by 38% this year. That's huge, man. I love seeing that, especially when we only saw like a small increase, not small, 17% increase in total revenue, but net income increased by 38%. that tells me they're doing a pretty darn good job of managing expense, or something extraordinary happened. And in this particular case, there's a couple things we may want to look at as to try to like, gosh, understand how, how did they crush it? So there's a couple things here. One is they had like this 1,400% increase in other income. So this is like, the Microsoft's side hustle. They're big investors and they own a bunch of assets, and this would be returns, other income that they get from investments. And so these are, I like to see this number, right? So it was up 1,400%, but it was down the previous year. But this has nothing to do with their operations. Like I said, this is like their side hustle money. And but it was a big number, another $1 million. So last year it was down by 650. So we're really talking about almost, $1.7 million a shift, right? 1.75 billion shift. And so, okay, so that would enhance their profitability quite a bit. And then the other was that the previous year they had a huge, uptick in taxes. That would have impacted this year. But in general, you go through the document, you can see, geez, it's a pretty well run company, right? Gross margin grew by 19%. Man, I'd love to see that. And so you just want to be able to pick a few line items that sort of impress you, and talk about them. Not rocket science. Don't overthink this, and don't be afraid just to point and go, look. I think Microsoft did better because their revenue grew at a faster rate than the other company I was comparing it to. Their operating income continued to increase. They spent more money on R&D every year, which means that I'm going to be in a really good position years from now as I continue to roll out new innovations, and their net income was up. That would be pretty simple to say, and that's just reading from the documents. So let's go take a look at the SEC website, right? Dun, dun, dun. So let's go look. So the website we want to go to is sec.gov, right? Gov. sec.gov, Security Exchange Commission. Lots and lots and lots of information here. But what we want to do is we just want to go right to the filings. And so search EDGAR. EDGAR stands for Electronic Data and Gathering and Retrieval, or something along those lines. It's just that, they had to call it something. So let's pick a company. Let's pick Apple, right? Apple Inc. And then we want to narrow it down and go to the annual quarterly reports, and there it is. There's our 10K. Once you open it, we click on the 10K. We want to open the document. This is a big document, right? This is a massive document. So we want to scroll down to the appendix. I mean, like I said, this thing is 80 pages, maybe. I think it's probably more than that. And we want item 8, excuse the dog. And we want consolidated statement of operations, which are right here. Okay, so it was right at the top. We got lucky. And then there's all kinds of other stuff. So don't confuse this document with consolidated statement of comprehensive income, right? Because this is different. I mean, you can already see right across, I mean, the income, net income is the thing at the top, not revenue. And so we want revenue or net sales. We want to be able to see revenue at the top. That's when you get the right document. We also want to be able to see their operating expenses. And here we don't see their operating expenses. So make sure you understand which statement that you're looking at. So this is Apple. Big picture, they grew from 383 billion. We got to remember these are reported in millions. So 383 million, 391 million, 416 billion, billions. These guys are putting out some big bucks. They made $112 billion in net income, in profit. And so these guys make some money. And so doing the analysis, I just put together this little simple sheet, right? doing the analysis. Super, just turning the financials into something simple that you can understand um, is pretty easy, right? I'm just going to put it in here. It's equal, right? We want this number minus, that's minus this number. That's it, right? So $12 billion change. So their product revenue grew by $12 billion. Now, in order to calculate the change percentage, remember it's equal, right? So if you're doing the formula, it's equal this number divided by, so you hit the division on your phone, divided by this, by the previous year. And that's 4.12%. And pretty straightforward. This is not overly complicated. Once you run the numbers, you're in good shape. And so don't overthink it, don't fret. And if you got any questions, just hit me up. All right, everybody. Bye.